Hello everybody, it's Shortest Investing coming at you today with 3 more dividend stocks that you can buy and hold forever. If you're new, hit that subscribe button. If you're returning or new, hit the like button. Let's get this video rolling out right this morning. I'm going to very quickly show off my portfolio. Again, I will always be transparent with that, never just hide it behind a paywall or anything from you. So you will be able to see my progress with that over time. And yeah, none of this financial advice. Always do your own research before buying anything. Just wanted to put that out there real quick, disclaimer. And yeah, stick with me here. Let's take a look at everything. M1 Finance portfolio, this is what we're looking at, up 14.73% year to date. S&P 500 is up 11.10% as of right now. I don't know why I said it that way. If we look at the holdings tab, so this is how things are looking. Bottom 3 positions being Texas Roadhouse, Hershey Company, and Extra Space Storage. Hershey Company, Extra Space Storage are down pretty big, but super long those companies. I'm happy with my buy-in prices, and for the long term, I'm just going to keep averaging down on them. I'm pretty happy with my position sizes as of right now. I might nibble a little bit more here and there, especially if it drops any further, but besides that, very happy with how the portfolio is looking. Right now, I'm just kind of in cash accumulation mode. Once I get up to like $400 or so, I might either deploy it into the portfolio, into these positions, or I might try and find something else I like. I don't know what I'm going to do yet. But the 3 stocks we're going to be taking a look at today: S&P Global, Canadian National Railway Company, and CSX Corporation, which is another railroad. The adjusted free cash flow yield is 2.69%, dividend yield of 1%, and a payout ratio of 49.3%. If we take a look here at the 5-year chart, they were at their high back in December 31st, 2021, and right now they're down 25.65% off of that high. This company has a moat and a half. You got them, Moody's, and MSCI. Those are the 3 top dogs when it comes to credit ratings and just issuing out ratings and stuff for companies. Now, revenue's been increasing at a rate of 13% over the last 5 years. Very good. Free cash flow 14.48% over the last 10 years. Very good. EPS 20.89% over the last 10 years. Again, very strong. This company's checking a lot of boxes. Debt's $10.73 billion. Their EBITDA is $4.13 billion. I think they issued out some debt and shares to do an acquisition last year, which, I mean, your company's doing acquisitions, you're just going to be growing their revenue and stuff. It's very nice, very nice. When it comes to debt, I don't like companies that have 3 times or more of their EBITDA in debt. That's usually what I look for. This being 10.73 and this being 4.13 billion. EBITDA is not an issue. This would have to be like 13 billion plus. So for that, still a check from me. Dividend's been increasing at a rate of 12.39% over the last 10 years. A very nice compounding. Like I said, they did issue out some shares to do an acquisition. But if you take a look here at the quarterly, whenever they did acquisition, 339 million, they're down to 319 million right now. So they've bought back, 20 million shares already? So, I mean, they're just chopping right back at it again. Very, very nice. Return on capital employed of this company is very reliably around 30s and 40s. This is going to dip like that because of the acquisition. But besides that, very reliable company. Gross margins are beautiful. Operating margins is right in line, super good, 40s, 50s% usually. Profit margin, same thing, 20, 30s. So strong, such a strong company. I like them a lot. Next up, Canadian National Railway Company is probably my favorite railroad out of everything, to be honest. I just love how the finances and stuff with this one look compared to the other ones. Adjusted free cash flow yield is 6.48%, dividend yield 2.22%, payout ratio 53.6%. Take a look at the 5-year chart here. They had a high back in March. I think it was here. If I can get my mouse to cooperate. March 25th, 2022. And they're down 22.59% off of that high. And they do have an earnings call today, so it's something I'm going to be keeping my eye out for, see how that turns out. Revenue's been growing at a rate of 5.6% over the last 10 years. Slow and steady. It's usually how these railways grow. Free cash flow, 11.41% over the last 10 years. Very strong. Love that. EPS, 9% over the last 10 years, up and to the right. And the thing I like about this, usually railroad companies have a lot of debt that's right at that 3-time line that I try to keep my eye out on. This has debt 14.37 billion. Their EBITDA is 9.6 billion. So nowhere even close, and I love that. Even though that's the case, dividends still growing at a rate right at 11% over the last 10 years. Very nice. And they are doing share buybacks at a rate of 2.38% over the last 10 years. And within the last year, over 3%, they are buying back shares more where they are down. And I love to see that a lot. Let me take a look at the quarterly and see if they're still nibbling at it. They absolutely are still nibbling at it, down to 683, I believe, if I've seen that correctly. 663. So they are really buying those shares back where the price is down. I love that. Good. Very good. Return on capital employed in 2020 was 11.5, then went up to 12.37, and then 14.61. Again, this company has a very reliable mid to upper teens when it comes to the return on capital employed, which I love to see. Gross margins are beautiful in the 40% area. Operating margins, mid to high 30s, very nice. Profit margins, mid to upper 20s, sometimes cracking the 30 mark. That is great. All check marks from me there. Next up, we got CSX Corporation. Just a free cash flow yield of 4.96%, dividend yield of 1.44%, payout ratio of 21.21%. Let me take a look at the 5-year chart here for this one. March 4th, 2022 is its last high. It's down 19.32% since then. Take a look at the revenue. Revenue's been growing at a rate of 5.42% over the last 5 years, and it is growing, it looks like. Very nice. Free cash flow, 23.72% over the last 10 years. Very strong. And this is free cash flow per share. Free cash flow in general is 19%. This is going to... Was the other one adjusted? Let me look at the CNI real quick. Nope. But, I mean, it's going to be more because these companies buy back shares. When you buy back shares, your free cash flow per share is going to be higher than your free cash flow, which is good. You want that. But yeah, 19% over the last 10 years, 5 years, ridiculous. It's great. I really liked it about this company a lot. It's one of the reasons why I picked them today to show you. EPS been growing at a rate of 10.51% over the last 10 years. It's just been taken off as of late. Their debt is $17 billion. Their EBITDA is $7.42 billion. So again, falls right in line with my 3-time rule that I like to keep. The dividend's been increasing at a rate of 8.2% over the last 10 years. Inflation beating, and their last hike was 10%. So very nice. And when it comes to shares outstanding, they are buying back shares like crazy over the last 10 years, 3.7% average. And over the last year, they nibbled at 5% of their share count. That is awesome. Love, love, love that. Return on capital employed, again, mid to upper teen area. They did have the 2020 dip down to 11.55, but it's up 14.61, and last year 15.27, so they're taking right back off again. Gross margins look great in the 30s and 40s. Operating margins, real good there in the 30s and 40s range, more 40s, and the profit margin in the mid to upper 20s. So very strong there again indeed. So there is 3 companies you might be wanting to take a look at, and I've got my eye on this one for the earnings call. This dips a lot. I don't know. I might deploy what little bit I got into it. But yeah, 3 companies that you can buy and hold forever. As always, do your own research stuff before buying anything. I greatly appreciate it. Hope you enjoyed that, and for more, make sure to hit that like and subscribe button. See yous.